Alright, so credit cards in Canada function similarly to those in other countries. Here's an overview of how they work. So number one, application and approval. You apply for a credit card through a bank or a financial institution. Approval is based on your credit score, your income, and other financial factors. Number two, credit limit. Once approved, you receive a credit limit, which is the maximum amount you can borrow on that card. Number three, purchases. You can use the card to make purchases up to your credit limit. Transactions can be made in stores or online. Number four, billing cycle. Credit cards have a billing cycle typically lasting about a month. So at the end of each cycle, you receive a statement detailing your purchases, total balance, and minimum payment due. Okay? Payment options. Number five, you can pay the full balance, the minimum payment, or any amount in between. Paying in full avoids interest charges, while carrying a balance incurs interest. Makes sense? Number six, interest rates. If you carry a balance, interest is charged on the outstanding amount. Rates vary by card and can be high. Number seven, the rewards and the benefits. Many cards offer rewards such as cashback, travel points, or other perks. Number eight is the fees. Some cards may have an annual fee or foreign transaction fees or charges for late payments. Number nine, building credit. Responsible use of a credit card can help build more credit, and it demonstrates your ability to manage your debt. Number 10, customer protections. Canadian customers benefit from various protections, including fraud liability limits and the ability to dispute charges. Always read the terms and conditions carefully to understand your card's specific features and fees.